Family Bank has announced a 38% growth in net profit for the first half of 2025, supported by strong revenue growth and a robust balance sheet. The lender's net earnings rose to 2.2 billion shillings, up from 1.6 billion shillings in a similar period last year. Here's Jasmine Omboi with the details.
Family Bank is crediting the significant jump in profits in the first half of 2025 to its 2025 to 2029 strategic plan, developed in collaboration with global strategy firm McKinsey. The Tier 2 bank has seen a 600 million shillings jump in profitability, reaching 2.2 billion shillings in the first half of the year.
This is our first year of 2025-2029 strategic plan. And during the first year of our strategic plan, we've put in place the initiatives that we need to put in place early enough. So we are going to invest, and we're investing a lot in creating the foundation for the next 5 years.
The lender's assets expanded by nearly 22% to 192.8 billion shillings, supported by a 10% growth in its loan book, which now stands at nearly 101 billion shillings. This was boosted by fresh funding partnerships with British International Investment and the European Investment Bank to scale up financing for small and medium-sized businesses.
We have seen ourselves grow. As I said, we are positioning ourselves as a preferred bank for Biashara.
Net interest income jumped almost 40% to 6.9 billion shillings, driven by higher earnings from government securities and loans. At the same time, customer deposits rose by 25.7% to 149.7 billion shillings. Operating costs increased by more than a third to 6.7 billion shillings. Even so, asset quality improved, with net non-performing loans dropping by 15%. To safeguard against potential risks in the current operating environment, loan loss provisions were raised to 663.5 million shillings.
And what happened is that there was reduction in disposable income. What that means is that the customers who would have maybe qualified for more credit, they are not able to qualify for more credit, and others maybe who had exhausted their third, they are left within a third, they start struggling, and you can see some level of increase in terms of non-performing portfolio, courtesy of reduced disposable income.
Family Bank ended the period with a liquidity ratio of 53.1%, well above the regulatory minimum. Over 90% of transactions are now conducted through digital channels. Jasmine Omboi, Citizen TV.